Good afternoon. Welcome to Cool Your Hills with Lillian Caldwell on AM FM 247. And today our special guest is Laura Brandao, who has been named Woman of Influence by Housing Wire. Congratulations.
Oh, thank you so much, Lillian. We're very excited, and thank you so much for inviting me to join your show.
Well, I have been interviewing several other ladies who have been announced as women of influence. And since not too many people, the audience especially, does not know about this, I want to shout it to the world. Because we know if they were men, it'd be plastered all over the news sites. And they'd be lined up with the good old boy network standing behind them proudly, holding a trophy. Yes. So I want to do the same thing with all the women who have been chosen to be women of influence. So you're a COO.
I am.
And why don't you tell everybody what you do and how you rose to that position?
Absolutely. Number one, biggest thing is that I absolutely love my industry. I love what we do because every single day I get to help bring families home. That's my honor. And I have been in the industry for quite a long time, started in my 20s and, kind of just loved it and got right in there. And about 11 years ago, during the crash of the mortgage business, I was provided an opportunity to actually join AFR and start a wholesale division. And what a wholesale division is that instead of me working directly with borrowers, I actually work with other mortgage companies. And they entrust me to be the lender on those transactions and be able to assist them in bringing families home. So 11 years ago, when the market was very chaotic and lots of companies were going out of business, I actually took a leap of faith and opened up AFR Wholesale as part of American Financial Resources. Well, during that time, I was very fortunate to be able to build a team of people that at that time had lost their jobs at those companies that were all going out of business. And we banded together in our own internal family. And we were able to build a company that I'm very, very proud of. And about a year after I joined, I was actually asked to become the first and only woman partner of AFR. So I'm also very proud to have that honor here. And we, every day, like I said, we work with other mortgage companies to assist them. And it's been an exciting ride. I mean, it really has, because our business, every day is kind of a roller coaster. You have your highs, you have your lows. But at the end of the day, it's all about that family. And I'm honored and privileged to be in an industry that I can use my ability of being nurturing as a woman, being strong as a woman, being a great multitasker as a woman. And all of those abilities have allowed me to be able to create a wonderful company that employs lots of families of our own and, of course, help our industry.
So what do women need to know when they go to take out a mortgage for a house, whether they're a first-time homeowner or life gets complicated, men leave, men die, things happen? So what kind of advice do your companies provide for women, since women traditionally are not really brought up to deal with the finances of any kind of investment?
I like that question. That's a very good question. And I'm actually going to take it back to something my mother, there's actually 3 girls in my family. And my mother always told every one of us, you always have to be able to provide for you and your children no matter what. So I'm actually even there. And luckily all of us are happily married for a very long time, so we never had to worry about that. But she always told us to still always think that way. So honestly, that's a fantastic question. I've never been asked before, so thank you, Lillian. So I think a woman has to be educated in every different way because, like you said, life happens. And even if it's not a matter of what happens if your husband loses his job, what happens if, some situation comes in that there's some type of illness in the family or something like that. So I think you can never, ever put yourself in the situation of, I don't need to worry about that. No. That's not accurate. You need to be fully aware of what your options are. And something that I, myself, even in my children that are in their 20s now, don't take on a mortgage that somebody just tells you you qualify for X, or a realtor that says, I can get you a house that's this number. Everybody, yes, you may be able to qualify, but you don't want to be mortgage poor. You don't want to have a situation that you can't take the family to Disney World if that's what you want to do that year. So absolutely, your home is your castle and where your family will build those memories and everything. But in addition to that, you have to live life. And you have to be able to put that rainy day fund over to the side. So if life happens, the car breaks down, whatever the situation is, don't ever put yourself in the situation that it's only the house that you have to worry about, because the rest of the things are going to happen. So be educated. Know that don't just listen to you qualify for X. Really look at the situation and know that, I'm sorry, I apologize.
It's okay. I get phone calls where I openly
I'm sorry.
Put things down. Not a problem. Continue.
All right. Wait. I want to actually, sorry. You know who that is? It's actually Mortgage News Network trying to get me to interview. They keep calling my cell phone. That's funny.
Well, I guess they figured that's one way of getting you.
They call me all day and I'm like, I'm working. So I apologize. So yes, going back to, don't just allow, regardless, actually, man or woman, don't allow some, gee, I'm going to have to just turn it off because they won't stop. All right. Apologize.
That's all right. There are many a times when technology just doesn't work out for me.
Friend, right?
That's right. And if you're good at what you're doing, you go with the flow and keep it moving.
I'm like, normally I just ignore them, but all right. So going back. So yeah, regardless if it's a man or a woman, we're in a mortgage situation. A lot of times people actually go into the situation of, I'm the expert. You should listen to me. And I can qualify you at this amount. But don't do that. You actually have to yourself feel comfortable. And I'm going to actually quote something I saw in Housing Wire just today. Today I read an interesting article that said that it is documented that Americans find the highest level of stress from buying their first home. They actually said that 33% of first-time home buyers have cried during the process. And the reason why they cried is because they looked at that payment and they went, but I didn't know that, that amount was going to come up to this amount when you added the taxes and the insurance and the mortgage insurance or whatever the situation would be. And so it's a scary situation when you buy it, especially that first home. So be in control. Know how much you're looking to spend to be able to have a life outside of just that mortgage so that you can have a nice family life. What if you buy that house before you have children? And then all of a sudden, now you've got additional mouth to feed and some daycare costs. Or all of a sudden, you have the child that's going away to college. And now you've got a college bill. Don't just look at it as, today, here's my situation. You need to look at, you're going in for a 30-year mortgage or a 15-year mortgage. And so my biggest thing is be educated. Don't let anyone tell you this is what's best for you, because you know what's best for you, not everybody else. And look at it as a long haul. It's not just today. Look at, am I expecting to have a family? Or does the child need to go to college? Whatever the situation.
Okay, great. Now, when I was in my young 20s, which was a long time ago, Let me put it this way. There was a formula that you were given as the amount of payments that should be going out that you should plan for with your paycheck and with anything else you would put in after Uncle Sam and everybody else took their cut.
Right.
Is that still applicable for today? Or is it something that they need to look at and decide how they should plan to put aside money?
Right. Good question. Good question. And, a lot of things have become automated, in our situation right now. As each year goes by, a lot of it is a lot of big data and artificial intelligence and calculation. So when we look at every individual borrower, some borrowers may qualify for more than another borrower. And yes, some people, we may be confident that somebody having X payment and a certain percentage of their income, where another person, we may feel we want to have it a little lower. And it's a variety of factors. It could be the length of time they're at their employer. It could be how much reserve do they have in the bank? You know what I mean? Do they have a large 401k, or maybe they have some really good savings plan, So it's going to vary based on the family situation, okay? As a general rule, my guide would be, you really don't want to go above maybe a 45% of your gross income should go towards a mortgage. Now, like I said, there are certain situations where above that is perfectly fine. And there's other situations where maybe it would be more comfortable below that. So every individual is going to be different. But as a general rule, I would say if you stay around that 45%, no more than 45% of your total mortgage plus your outstanding debt. So if you have your car payment, your credit cards, plus your mortgage, that should not exceed more than about 45% of your total gross income.
Now, a lot of people receive notes from the bank or from other mortgage companies, and they're telling you, have you signed up for a 30-year? Well, we can do X, Y, C, 1, 2, 3. So the question is, when is a good time? And a lot of people also remortgage their houses or have a reverse mortgage that goes backwards. So it's kind of like a multi-question here. Yeah. When is a good time to consider somebody offering you something more than or better than what you've just got?
Right.
As compared to what is now on the open market, because that is tied to what you agreed upon when you originally signed for your mortgage.
Absolutely. And you're correct. There's lots of marketing material out there and lots of ads coming at you and opportunities. So yes, very, very good question. I guess, again, kind of goes back to that question before about education and about knowing what's best for your family. Okay. General rule, if you're trying to decrease your mortgage payment, general rule, you want to be about 1% lower if that's your only goal. Now, that may not be your only goal. Your goal may be, let's go back to that child that's going to college. Maybe you've been in your home for a while and you've built up your equity and you're looking at your options for paying for college. And maybe utilizing the equity in your home is a good option for your family. That's a situation that maybe, regardless if the interest rate is lower, that may be the best option, okay? Now, if it's strictly, I want to lower my payment, you probably generally want to have about a 1% reduction in that interest rate in order to get the best, bang for your buck, so to speak, to make it worth your while. Again, it depends on your loan amount. The bigger the loan amount, of course, maybe it could be less than that because it is a bigger savings. Smaller loan amount, you want about a point, okay? So I would say always be careful when you're getting these offers. Don't just read, I'm going to save you X. Think about, ask good questions. How much are the closing costs? What will the fees be and what will it cost me? What will my new loan amount be if I actually do this refinance? Because if I owe 100 and I've already paid down 5 years of my mortgage, and now I'm going to owe 107 and I'm getting 5 years added back on, Well, you really have to look at that. So be educated, ask good questions, and look at the whole parameter to see if it's the best option for your family at that time.
Now, many people don't seem to realize when they go in for a mortgage that you have to fill out a sheet saying how much money you owe.
Mm-hmm.
Not only is it your credit rating,
Right.
but also how much is on your credit cards. And yes, folks, if you own your own company, irregardless of an LLC or a partnership, you still have to declare it in your mortgage.
Correct.
And if you don't know that, open up your ears and pin them up.
Yep.
Because these are some of the things that people need to have and be aware of when they walk into a mortgage company.
Yes.
But on the flip side, what do you do when somebody's coming into you and they've just finished school?
No.
And we all know, I mean, it took me 25 years to pay off my school loan to the U.S. government.
There you go.
Okay? It took me a long time. But the thing in the matter is there are a lot of people coming out from school now with 30, 40, even 50,000 more if they've studied to be a doctor or a dentist or an astronaut. So how do you determine whether or not, because they're considered a risk, how solid that this particular person is of how much money or value he's going to bring out from his job? So how do you decide on something like that?
Right. So, I mean, I'm assuming if it's if it's a professional, maybe it's not even a professional. A lot of times the kids graduate and they don't necessarily get the job in the field that they went to school for. Yes. Maybe they have to start at a lower position because they need to get that experience in order to work towards what they went to school for. So we, of course, are going to look for a 2-year history. Now, of course, if somebody just recently graduated college, of course, they would need to be employed at this time for us to utilize the income from that. You can use college as part of that 2-year history. They don't necessarily have to be 2 years on their current employer at this time. But yeah, we will qualify them based upon where they're currently working. Even if it's not in the field that they went to school for, we would just need their college transcript to actually verify that they were in school during that time. And yes, the student loans, I mean, over the years, we have seen it increase more and more and more over the years. A lot of the guidelines on the mortgage programs have changed because years ago, I mean, when I started in the mortgage business, you would get a letter of deferral and it would be like, oh, I don't owe these student loans for a year, and you didn't even have to worry about them. Now some guidelines have changed where regardless of that, you have to factor in a payment. Because if somebody owes, like you said, $50,000, $60,000, $70,000 in student loans, well, they're going to come due and they have to make payments on those student loans. So, of course, a lot of the regulations have changed over the years because everybody's noticing there's a lot more student loan debt out there.
Very good. Now, I understand that you created a program. I have to speak softly, otherwise my Alexa wakes up and starts talking to me. But I understand you coordinated something between Alexa and another type of program. Could you please explain that to the audience?
Yes, absolutely. So we built our own technology within our company, and it's called AFR Loan Center. So that's our system that we created internally. That system works within my clients and the borrowers. So the borrowers are able to work within there. Well, about maybe almost 2 years ago now, we came together and we said, you know what? Wouldn't it be great if we integrate this system with Amazon Alexa? And so we actually built the technology. So now my clients, when they're in the office and are listening to their music on Alexa, they can actually say, Alexa, ask AFR, what locks do I have that are expiring, for an example? And Alexa will actually start reciting, I see that the Smith family lock is expiring on Friday, August 10th, for example. And it will actually provide answers without anyone having to log into the system or actually look anything up. So if they're sitting in the car and they speak to their phone or whatever the situation will be, there is a full integration into Alexa.
That's pretty neat. I mean,
yes.
My internet radio station's on there, so if you ever want to listen to me, you can tell 'em, okay, this is what I want to listen to. I do have another question.
Sure.
And I'm running into this with my husband was recently diagnosed with Alzheimer's. So as a result, he took care of all the financials. But now all of a sudden, I'm taking care of all the financials, and that includes the mortgage. Is there anything that has been written into any of your policies that when another spouse all of a sudden is insinuated to take care of everything that once was taken care of by somebody else, that there's somebody there to walk them through what they need to know?
Oh, that's a really good question. I mean, the only time we've gotten involved in that is that if there was a situation where you were looking to do a cash out or something like that, you would actually need to have something from the court giving authority for you to be able to take that cash out and be able to do that transaction. Now, as far as education or information, I guess my biggest recommendation I would do is to actually reach out to whoever it is that's servicing your particular mortgage and actually tell them what the situation is, and ask them if there's anything in terms of any power of attorney, any legal documents that they would recommend that you have in order to be able to make sure that you're protected and that everything is in order so that you're now taking that over. So that would be I would reach out to your servicer.
I think that's a good idea. I have found that working with some of the banks and with some of the bigger investment houses, they do not have anything in place.
Yeah.
So
it's a very good thought. I mean, that's definitely something to be aware of. Yes.
I would think so, because if a person has not been trained or has not been educated, let's face it, there are not those kind of programs available out there, even through Google, because I've searched, that would really take you by the hand and let you know exactly what's going on. And I was just curious because I was going through it, and I have run into several roadblocks. And I know that when I made that suggestion at the bank, they looked at me kind of like somebody was not there. And it's because I think most people don't understand or recognize that the boomers are getting older. And Alzheimer's, Parkinson's, dementia is a big part of the equation now. More than 70% is going to be diagnosed as one of those diseases within the next 5-10 years. So it makes sense for me in the financial market, especially, that there are rules to follow, that somebody has sat down and organized so that when it happens, they don't have to go running around or cry because this is your first time into the financial investment world and you don't understand the language.
Right. So you're looking at it from an educational standpoint, not so much from a legal standpoint.
Well, illegal is you have to have a POA.
Of course.
I understand that. But people should know, and I'm sure you know as well, that you need to get a doctor to sign off on his letterhead, and it's only good for 30 days. See, I learned all this along the way to get all this stuff out. And that applies to a mortgage company and to investment firms and anybody else where everything was done in the name of your spouse. Right.
But you're jointly, right?
Yes, we're jointly with everything.
Good. That's good.
I think when we first bought our first house, it was recommended to us through the mortgage company, you ought to put your wife on the policy as well.
Yes. You definitely want to do everything joint, because that way, if anything happens, regardless, there's always the other automatically, if everything is with you. So good. But that is a good point. And honestly, talking along that line, the majority of people holding mortgages right now is Gen Xers and baby boomers.
Yes.
The millennials are such a small piece, and they continue to be a small piece for a combination of reasons. One reason, affordability. They have student loans, large student loans, and they can't take on a mortgage. Another reason is they're definitely more, they're more in this bounce around. they're not so stable. I want to slap a 30-year mortgage on me. They're more of, I'm going to just rent. I'm just going to move around.
They're more 75%.
Yes.
More interested in renting. And the other thing I read recently is that they're more apt to spend money on vacations.
Yes.
Than they are to put away for savings for when they get old.
That's right.
And I was shocked because that's the pattern that their parents and the baby boomer generation has taught them.
Right.
That everything comes before you put into retirement.
Right. And we all know how fast that comes. So yes, you do have to make sure. And that goes back to what I said about when you're buying that home, no matter what someone tells you, always look at the picture of making sure that, if you do want to take that vacation, make sure you buy a home that will allow you to take the vacation. You can actually have both if you're smart. You don't have to choose one from the other. But unfortunately, a lot of people choose one for the other. And that's where, yes, as a society, I think a lot of it's education. I think a lot of it is, it's funny. Mortgages and finance is actually probably something that no one speaks about. Think about family. It's one of the topics you don't discuss, right?
Right along there.
You don't speak about.
No, along with death and politics and religion. Excuse me.
That's right. So it's interesting how in our society, it's something you just don't speak about. And yet, it's probably one of the most important things you could speak about. Because by speaking about it, you can kind of get an idea of, well, what did you do and what did you do? And people can be educated. Unfortunately, people they go to Google, like you said, right? They're going to ask Alexa to get it for them, which is great. All of that, I can't live without it. But sometimes we need to open up the dialogue as people and be able to say, you know what? I know it looks like you really want that $400,000 house, but I bet the $325,000 house will allow you to grow a little bit more. So when the kids are ready for college, maybe you don't have to take out as many student loans.
People are not taught to think that way. Mm-hmm. Can you just touch briefly on when there are two situations? One, you want to move. You want to go into another house.
Sure.
And a lot of people get trapped when they still have the mortgage pending on one house and they're looking at the other house with another mortgage company.
Right.
And they don't understand. It took me a long time to learn this as well, to transfer, and a lot is involved with points. Now, I'm not a realtor, and when I had the points thrown at me, I'm going, points? So
well, ideally, the best situation is to actually sell and buy at the same time. So in a perfect world, if I was going to recommend anything, your best is to actually simultaneously do that. And that's the most common thing that I see, is that you have a contingency so I'm going to sell my home. Okay, so I'm going to sell my home and, Mrs. Smith comes and she's going to buy it. I put something in my contract that says I'm not selling my house to Mrs. Smith until I get my new house. And so it's in the contract and it's protected that they know that it's all contingent that I buy my new house and they can buy my house at the same time and we will close together. That's your ideal situation, because then you don't have this double mortgage payment happening.
Yes.
Because when you do that a lot of people can run into issues with that, and it could be very stressful, and it could be unfortunately they think, oh, well, it'll only be a short period of time, or I'll be able to cover these two mortgages. But the problem is that you never know what's going to happen when you're relying on someone else to get a mortgage. Not you, the new buyer.
Yes.
They have to get a mortgage. Or what if an inspection comes back bad and all of a sudden you have to make a repair or you have to wait for something to be done? I highly recommend setting up your contract to be contingent upon you moving into getting the new house, so that way you actually don't run into that issue. That's probably the best advice I would give.
Because I know when people sell their homes,
Mhm.
what they ask for is not going to be what they receive
That's
in the
correct.
final
CD,
counting.
closing
Yes,
disclosure.
yes. And a lot of people don't understand if they're selling their house for $350,000, why the check comes in for $225,000. And what they fail to bring into the equation is that they have to pay back their mortgage.
Of course,
first.
and the realtor,
And the realtor.
any escrows that have to go and closing costs that transpired. So you're correct. They are not walking away with that number. That's correct.
So, what else can I ask you, Laura? So what are your plans?
With what? Where am I? Well, I have something.
What's your next step? Obviously, the glass ceiling.
Let me tell you something very exciting I'm working on right now. So I am part of an organization called AIM, which is the Association of Independent Mortgage Experts. And the person that runs this organization actually asked me to start and be the co-founder for the women's version of this organization.
Excellent.
So I am actually launching WAME, which is Women's Association of Independent Mortgage Experts. And we are doing a big event in Las Vegas. On October 19th is my inaugural event with all the ladies. And essentially we are putting something out to women of all levels within the mortgage industry, because I feel that our industry is not known for the ladies. Our industry is man's, banker, kind of thing.
Yes, I know that feeling. There are very few women in internet radio. Yes.
Yeah. Oh, there you go. Same thing. So there's lots of women working in the mortgage business, but there's not a lot of women at the top of the mortgage business. So I'm actually very proud to start this organization with an affinity group of AIM, to where I'm going to open it up as a way to inspire, a way to motivate, a way to educate, and a way to band these women together within our industry to show that we deserve a seat at the table, we deserve a voice, and that's kind of what I'm working on right now, and I'm really excited about that.
Oh, I'm very excited for you. In fact, I have some ideas for you that I would love to discuss with you after the interview is over. So, Laura, please tell everybody where they can find you on the World Wide Web, where they can find your new organization, and a little piece of wisdom to us ladies out here who are
Absolutely. Well, you can find me. Our company is AFR, and I am afrwholesale.com, and that's Laura Brandao. My new organization is wamegroup.com, so a Women's Association of Independent Mortgage Experts. And my piece of advice is, I actually think that us ladies have a very big advantage, because in my business career, one of the things that I always kind of keep as my little secret as being a woman is that we can use, like I mentioned earlier, we can use our ability to build relationships, our ability to sometimes be a little silly where nobody questions it. I can be unique, I can be sensitive, and I can multitask and work harder than any other gentleman I've ever worked with. So I actually feel that we have a strong advantage, but yet we keep quiet, and yet we let our head sometimes get in our way, meaning we overthink things. So I think if we just start speaking openly and band together to say, we got this, we actually have a leg up over the men.
Oh, absolutely. My husband can only do one
thing at a time.
Besides never asking for directions. But outside of that. And I said, but when I was bringing up my child as a single parent, I had to go to work. I was going to college. I was taking care of my parents. I was taking him to daycare. And I was also running a household, all the same thing. And I said, I don't understand why men can't do that.
They can't.
And he looks at me and he says, I'm a chemist. You do things very carefully. I said, I raised a child very carefully. But that doesn't mean that I couldn't do anything else, because if I didn't, everything else would have fallen apart.
Exactly.
I mean, they look to women for generations to be able to do a multitude of things. I mean, during the Middle Ages, who was holding down the castle while husband was out fighting, or in the Crusades, or on the Wide West, where the husband was out fighting somebody who was holding down the log cabin, keeping the Indians and marauding mountain men from taking their food.
Right.
It's always been women.
Right.
I've never understood how we got on the underside of the shoe here.
I'm not sure. I'm not sure. But time and time again, listen, I'm very pleased that I was born at a time that I actually had the opportunity to be able to rise in business. I know that wasn't always the case, in our society.
In
that was not the case.
You were barefoot and pregnant. I'm sorry.
Right.
That's
and my mother tells me those stories, of employers asking, so are you pregnant? Are you going to, I remember my mother telling me that she had to take a pregnancy test before on a job interview in the 60s. And that, of course, is horrifying, right? With even thought of something like that in this day. But I'm very thankful that I was born at a time that I could have these opportunities. And I'm excited for all the young women behind us that the world is their oyster. And there's so many opportunities for them. And it's really just, I'm excited to be able to, actually, I said to my mother just last night, I feel like I'm building my legacy, that I want to build an organization that is going to inspire, the next generation behind me to be able to build up new leaders and better leaders, people that will surpass me and keep going. So that's my goal.
Terrific. I won't ask you if you can make coffee.
I can't. So don't ask me.
I'm not going to ask. Thank you all, ladies and gentlemen, and children of all ages, for our interview with Laura Brandao. And you can see this all over again on facebooklive.com/PWR Network LLC, twitter.com/Lillian_S. You can also hear the audio on YouTube. So you're going to be provided, Laura's going to be provided with a special link with iTunes. And if she gives it out to all her fans and all her peer group, and she has all those people going into iTunes, iTunes will make sure that you are promoted head and shoulders over your competitors, because that's the way it works. You'll also be on amfm247.com and https://passionateworldtalkradio.com. And before you go away, Sanayana, The Life of Reason in 1905, had this to say: in accomplishing anything definite, a man renounces everything else. And that's true. I spoke to a CEO before his time. He was 21, 22, and he says, if you want to get to the top, you go home, you have your dinner, you have your glass of wine, you're in bed by 9, you're up by 5. He says, if you don't want to succeed as part of being the C management, then you go home, have a glass of wine, go out and party, come home, and barely make it to work the next morning. And he was a CEO, I think, in 3 years. So people, take note. Thank you all very much for listening. And remember, stay tuned.